Okay, so for the first question in the assignment rubric, I take the part. I take a liquidity ratios part. So, what is liquidity ratio? Liquidity ratio is a financial indicator that used to calculate the company capacity to meet its ability to repay loan within a short period of time. Means in between 12 months. Okay. Okay. We already know about the definition of liquidity ratio. So we move to benefits of liquidity ratio. Uh, there are three benefit of liquidity ratio. For the number one, help in determining the financial stability of a business. The liquidity ratio helps to evaluate how stable a company finance are. So next, number two, uh, liquidity ratio can assist a business in gaining investors. Means a company that has a healthy liquidity ratio can attract investor more rapidly since it is seen as financial reliable. Okay. So and the last one, the last benefit of liquidity ratio is liquidity ratio can assist a business in obtaining credits. Means the liquidity ratio is a statistic that used to determine a business credit worthiness. A good ratio can assist a company receive credit because it suggests that it can repay its loan in a short period of time. Okay. In liquidity ratio, we have two under the liquidity ratio. Number one is current ratio, and number two is quick ratio. So we go further on the formula for current ratio. Formula for current ratio is current asset divide with current liabilities. And for formula quick ratio, current asset we minus it with the inventories and divide it with current liability. Okay, let's move to calculation for current ratio. We do calculation based on the Hab Seng industry Berhad. So we calculate it in 2 years, 2022 and 2023. So current ratio for 2022 is 133,315,439. We divide it with 64,883 and 267 million, and we got 2.05%. Okay, for current ratio for 2023, uh, the current asset is 158, 442, 983 million. We divide it with 69 millions 940 580 million. We got 2.27. So we compared the ratio between these 2 years. So comparing the current ratio between year 2022 and 2023, the higher rate is better. Okay, okay. Let's move to calculation for quick ratio. So for quick ratio also, we calculate for 2 year, 2022 and 2023. So based on the formula, current asset minus with inventory and divide with current liabilities. So for quick ratio for 2022, we got 133, 315, 439 million. We minus with 29, 941 and 476 million. We divide with 64, 883, 267 million. So after we minus, we got 103, 373, 963. We divide it with the current liability, 64, 883 and 267 million. So For quick ratio for 2022, we got a 1.59%. So let's move to quick ratio for 2023. We got a current asset is 158, 442, 983 million. We minus it with the inventory, which is 30, 100, 30, 126, 367 million. We minus it with 69, 940, and 518. So after we minus it, we got 128, 316, 616. We minus it with the current liability. So we got 1.83. Same like current ratio, we also comparing this between these 2 year. Um, for quick ratio for 2023 is higher than quick ratio for 2022. So comparing the quick ratio between year 2022 and 2023, the higher rate is better. Okay, that's all.
Hi, my name is Zulisha Binti Muhammad. So today I will continue with my session on debt ratio. In this slide shows about the statement of financial position (SOFP) for the group and company assets and liabilities in 2022 and 2023. Each calculation in these two tables must add current assets or liabilities to non-current assets or non-current liabilities to obtain total assets or liabilities for the years 2022 and 2023. So for the next calculation, same as before, but it must calculate for each final total. For asset 2022, RM 212, 835, 948 in 2022 plus with RM 83039 208 in 2023, and the total is RM 280 295 875 156. For the liabilities 2022 RM 71 million 735 198 plus with RM 1,464 401, and the total is RM 73 199 599. And the next is for asset for 2023 is RM 238 660 869 plus with RM 82 915 669, and the total is RM 321 567 538. And lastly for liabilities is RM 82 915 669 plus with RM 1 471 345, and the total is RM 77 90 90 100 901 875. So for the next for calculation debt ratio, the formula is total debt divided by total asset. So we move to 2022. RM 73 199 599 divided by RM 295 875 156, and the total is 0.247 or 24.7%. For 2023, RM 77 901 875 divided by RM 321 567 538, and the total is 0.242 or 24.4%. And the analysis is in 2023 has the loss percentage of 24.4%, and it is good from 2022. For the interest earn ratio, the formula is EBIT, earning before interest and tax, divided by interest. So we move to 2022, RM 997 328 divided by RM 1,864,638, and the total is 26.830. And the next year is 223, RM 84,101,237 divided by RM 2,912,777. The total is 28.873, and the analysis is in 2023 is the higher is good than 2022.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Khalish bin Idris. So for my part, I'm going to talk about efficiency ratios and the roles of efficiency ratios and the purpose of it. And for the first one is inventory turnover ratio. So what is the purpose of inventory turnover ratio? This ratio indicates how efficiently a company manages its inventory. A higher turnover rate suggests that the company sells inventory quickly, reducing storage costs and the risk of obsolescence. So for the second one is account receivable ratio. So what is account receivable ratio? Which is this ratio measures how effectively a company collects its receivables. A higher ratio implies efficient credit policies and effective collection processes, leading to the better cash flow management. So for the third one, we have account payable turnover ratio. So what the purpose of it is, this ratio shows how quickly a company pays its suppliers. A lower ratio may indicate the company is taking advantage of credit terms, while a higher ratio could suggest the company pays off its suppliers too quickly, potentially harming cash flow. So for the lastly, which is asset turnover ratio, which is this ratio assesses how efficiently a company uses its assets to generate sales. A higher ratio indicates that the company is utilizing its assets effectively to produce revenue. So that is the role of efficiency ratios. So for the first one, which is inventory turnover, so for the formula for inventory turnover, which is equals sales divided by inventory. So we have all the information there. For 2022, we have RM 380 million 194,335 ringgit Malaysia divided by 29,941,476 ringgit Malaysia, and it equals to 10.627 times. So for the 2023, we have 357,270,867 ringgit Malaysia divided by 30,126,366 ringgit Malaysia. So we have an equal of 11.859 times. So for the interpretation for 2022 and 2023, the inventory turnover for 2023 is higher than 2022 with 11.589 times for 2023 and 10.627 times for 2022. This shows that the inventory management is improving drastically. So let's move on. Alright, so for the next part, which is average collection period. So for the formula for average collection period, which is account receivables divided by sales divided by 360 days. So we have all the information here, which is for 2022, 40 million, we have 40,168,825 ringgit Malaysia divided by 380,194,335 ringgit Malaysia divided by 360 days. We have equal of 45.446 or 46 days. So that is for 2022. So for 2023, we have 37,268,840 ringgit Malaysia divided by 357,270,867 ringgit Malaysia divided by 360 days, we have equals of 37.545 or 38 days. So for the interpretation here, which is the average collecting duration has dropped from 45.446 days in 2022 to 37.545 days in 2023. This suggests a positive improvement for this company, which become efficient in collecting receivables. So let's proceed to the last one. Alright, so let's move on to my final part, which is total asset turnover. So for the formula for asset turnover, we have sales divided by total assets. And let's move on for our calculation. So for the formula, so for 2022, we have 318,194,335 ringgit Malaysia divided by 212,835,948 ringgit Malaysia, which is equal by 1.495 times. So for 2023, we have 357,270,867 divided by 238,660,869 ringgit Malaysia. So the equals of 1.497. So for the interpretation, we have so for the interpretation for asset turnover ratio, they are slightly increased from both year, which is 1.495 times for 2022 and 1.497 times for 2023. This shows that this company has maintained the efficiency, which be a sign of a strong operational performance. Thank you.
Hi, my name is Ifa Fayada Binti Ismadi. I will proceed with the profitability ratios. So the first, I will explain the importance of the profitability ratios. They have many, but I just give the three examples of the importance probability ratios. The first one is the assessment of the financial health. So the profitability ratio offer that snapshot that of the company that helps science industry provide financial health by indicating how well it generates a profit. It also can help the stakeholder understand that whether a company financially valuable and how it can effectively to use in resources to produce the profits. This is will be essential for the investor, creditor, manager to garage the ability to sustain the company operation to grow. So I proceed to the next one is the operational efficiency. So the ratio just like the gross profit margins and operational profit margin reveal that how efficiently the Hapsang industry Berhad can running the operation. The cost of management, pricing strategy in relation to the revenue. So the effectiveness of the operation can lead to the higher margin and the profitability impacting the long-term sustainability and the competitive. So for the last one, the investment decision. For the investment decision is make the investor use profitability ratio to assess the activeness of the company stocks like ROE and ROI help to determine that if the company generates educate the return to for it to the shareholders. Those ratios are in the making in from the investment decision and evaluating the potential returns on the investments. So now I will be profit to the calculations of the profitability ratios. They have three. So they have three. For the first one, they have net profit margins. So the formula of the net profit margins, net incomes divided by sales. How to get a net income? Net income is equal to earning after tax. So for 31 December 2022, the Hapsens company got 0.08 uh, 8.1%. And for the 31 December 2023, they got 0.127. For 0.127 on 31 December 2023 is good than the industry of 0.0 0.082 on the 31 December 2022. So the second calculation is the return on assets, ROA. So the formula how to calculate the ROA is net income divided by total assets. This ROA, the highest totals is more goods. So for the 30 December 2022, they got 0.13, 0.13. So for the 31 December 2023, they got 0.19. So 31 December 2023 is the good because it's higher than 31 December 2022. So for the last calculation is ROE. The formula how to calculate the ROE is net income divided by common equity. How to get the common equity? Common equity equal to common stock plus retained earnings. This calculation is also the higher points is goods. So for the 31 December 2022, based on the data that Hub Seng's Industry Berhad table financial year ended, ROE they got 18.5%. For 31 December 2023, they got 27.8%. So the year of 31 December 2023 is good, but is good than the 31 December 2022.
So, for the conclusion, I would like to conclude it that following the calculation of Hub Seng Industry Berhad's current and quick ratio and examination of total assets and total liabilities reveals a slight increase in liabilities from 2022 to 2023. If obligations grow faster than assets, it may be necessary to regularly manage liquidity. So for the debt ratio is remain relatively stable, indicating that the company's Hub Seng Industry Berhad financial leverage has not changed. The slight increase in liabilities can require management to ensure that debt levels remain sustainable relative to assets. Without the exact figures for inventory turnover and average collection period, it is challenging to provide a precise efficiency analysis. However, the total asset turnover can be inferred by dividing revenue by total assets, and any significant changes here would indicate shift in how efficiently the Hub Seng Industry Berhad is utilizing the assets to generate the revenue. So that's all from me. Thank you very much and Assalamualaikum.